At one point, Castor Maritime has been the highest growing penny stock in the whole market. So much so that many brokers decided to even restrict you from buying those shares. Like, to give you an idea how significant this was, it was the same treatment as what happened to GameStop and AMC when the shares were literally skyrocketing. In this video, we're going to look at the company from the perspectives of the company itself, the current reality of the sector, and the financial market. And we're going to talk about what are the most important aspects to think about if you're considering to buy the shares. And we're going to talk about what are the most important aspects to consider regarding if and when you should buy the shares. So, if you're thinking about buying Castor Maritime shares, or if you're wondering if you should keep your position, or if you just want to profit from a volatile penny stock, keep watching this video until the end, because we're going to try to answer all those questions. Castor Maritime is a logistic company. The company moves dry products on the ocean with freighters. Recently, the company's shares literally took off from where they were and became one of the stock market's fastest growing stocks. Actually, when I first took notice of it, it was the company that rose the most in the market on that day. The next thing I know, Robinhood decided to limit people's capacity to buy the shares. By the way, just a quick segue here. If you're still on Robinhood, please, for the sake of your own money, consider moving your holdings to another broker. If you're wondering why you should do that, check the CEO's answer to the platform limiting GameStop shares. Alright, let's go back to our topic. The main reason why Castor Maritime rose that much back then can be explained in two layers. First of all, the company decided to purchase a lot of additional ships, more than doubled its fleet size at the time. As we know, the world economy is in an abnormal state at the moment. Abnormal being a very nice way to put it, because I should actually say total shutdown. Many shipping and logistics companies are reducing their exposures or literally liquidating everything. That's a bit like, let's say you want to buy a guitar, and it just so happens that your neighbor's garage band split it, and the guy is trying to liquidate his professional level guitar for a quarter of its price just so that he can buy a few packs of cigarettes. Well, it's a little bit like that, what's going on with Castor Maritime at the moment. The ships that it buys are probably not at when they're at the most expensive, and now is a good time to increase their capacity while its rivals are having harder times. Another reason is the additional upward effect simply from the stock going up. What I mean by this is the fact that this stock went up initially and got the attention of a bunch of investors, just like it got mine at the time, and then attracted even more investors to buy in the stock's shares to profit from a bullish run. The more the shares go up, the more there are people trying to buy the shares, and then the cycle continues until it stops. Okay, so that was the reason why its stock skyrocketed back then. But ever since its peak at $1.47, the shares have a really hard time going higher. The price didn't collapse, but let's just say that the price action has been, sloppy. That phenomenon is caused by many factors, but the most important ones are the company's own opinion on its own stock and the overall market mood. So, what did the company actually say? They said that the recent increase of the share price wasn't justified by the real progress and growth that the company itself witnessed. In other words, the management of the company fears that the shares are way too high compared to where the company actually is. And people are just going to have too much expectation and crush the stock price eventually once the reality sets in. So, in this regard, I personally can understand it. I think that many companies would be wary of their own stock price if it's too high and increased by too much too fast. Actually, both Tesla and Palantir have expressed similar worries before. Now, the second reason, and this is in my opinion the main reason why the stock has been going down, and that is the overall market mood. If we look at the price movement pattern, we can see that actually the price action of Castor Maritime is quite similar to the stock price movement of many other companies. What that means is that the stock is currently under the influence of the overall market tendency to be careful, to be vigilant, to be more skeptical of penny stocks, growth stocks, and startups compared to how things were back in 2020. That attitude of most market participants will absolutely put its weight on future stock performance of those companies. And I think that this is going to keep going like this for some time still. But actually, instead of saying that the company should be avoided now, I would suggest you to keep it on your watch list. And here's what we know. The company just doubled its fleet size. When things eventually go back to normal, it will be in a better position than it was before that expansion. And theoretically speaking, based on the physical reality of the company, Castor Maritime would have a better capacity to generate income. What we should learn to avoid is the stock market movement in the opposite direction at the current moment, because the company admitted itself the shares don't reflect the reality at the moment. Another fact that we know is that the stock seems to have found some kind of support. Another fact that we know is that currently the stock doesn't really have a support level. In that case, I think that it should be kept on your watch list, but not purchased all in at the moment. Because with the tendency that it seems to have, I believe that the stock will go lower before it goes back higher. Of course, there's no exact rule here to apply. But the rule of thumb is to try to delay your purchase as much as possible in order to have confirmation that will be provided to you in time. There is one scenario that should trigger our interest and to increase the purchase rate drastically, and that is if there is a clear sign that the stock has bottomed out. So, for example, if there is an intraday pin bar, or if the stock stays at the same level for about like a week. In that case, I would suggest you to increase the buying rate and get at least 50% of your holdings at that price level. Now, keep in mind that Castor Maritime is a penny stock, so definitely don't put all your eggs in this one basket. I would say put in maximum like 1 to 2% of your portfolio. Thank you very much for watching. If you like my content, please like, comment, and subscribe to my channel.